How's it going, everybody? It's Stas here. So in this video, we're going to be going over Goldman Sachs's new GDP forecast. We're going to talk about the jobs report a bit. We're going to go over the implications of all this stuff and my thoughts on everything going on and what I'm doing here in the near-term future. So sit back, relax, smash that like button if you guys find value. Get your 2 stocks from Webull, your $50 from M1 Finance, and check out my Patreon if you guys want all my real-time buys, sells, call-outs, morning update videos, and much more. All of those are linked down below, and let's get right into the video. And first and foremost, the markets today are red. The S&P is down 0.2%, the Russell's down 0.4%, the Dow is down 0.5%, and the Nasdaq's the only one that's actually green, the Nasdaq 100 being up about 0.2%, but overall, today has been a red day. And we got some news today that Goldman Sachs economists cut their U.S. GDP forecast for the second time in a month, citing the impact of the Delta variant. And if you guys don't know what GDP is, I'm sure most of you guys know, but this is the definition straight from Investopedia. Gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's border in a specific time period. As a broad measure of overall domestic production, it functions as a comprehensive scorecard of a given country's economic health. So now that you got that definition down, you know what GDP is. It's pretty much the total monetary or market value of the finished goods and services within a country's border in a specific time period. Let's talk a little bit about Goldman Sachs and what their forecasts are. So economists at Goldman Sachs now see the overall U.S. GDP for 2021 at 5.7%. down from the prior estimate of 6.2%. And back on August 18th, remember they cut this forecast twice in August, or twice in the past month in general. On August 18th, economists cut their third quarter U.S. GDP estimate to 5.5% from 9%. So that is one heck of a cut, and that goes to show how economists believe this Delta variant it's going to affect things here, no doubt about it. And the economists don't expect this year's slowing growth to last long, though, so that is a good sign, or get much worse, so that's another good sign for 2 reasons. Reason number 1 is the best guess based on the experience of some European countries and the recent decline in domestic positivity rates is that U.S. virus cases will start falling later this month. And that's really the main catalyst here, guys. The virus and the cases. I mean, let's be honest. Everybody knows that. So if we see the Delta start dying down, cases start dying down as vaccination rates are going up, that is kind of what we're seeing. Well, I mean, hopefully is what we'll start seeing. That could be a sign that, okay, now maybe GDP might get better, right? They might start guiding it back up, which is great. And the second reason is people have adapted their spending habits. Widespread vaccination has reduced the likelihood of government restrictions, and vaccinated individuals are less likely to voluntarily disengage from the economy. So what that pretty much means is people, they're still spending money, they're adapting their spending habits, and people that have the vaccine, they feel like they don't have to disengage from the economy. They're still going to go out, they're going to do their thing, they're going to participate in the economy and thus boost up that GDP. So that could be a reason why we're seeing a bit of a sell-off in the markets today. The fact that they're cutting the GDP forecast for the second time, Goldman Sachs, that is, over the past month. That's definitely a reason. And we got the jobs report last week for August, and that came in very weak. I mean, very weak. And this is not a good sign either. I mean, this August jobs report showed the domestic economy added a disappointing 235,000 jobs during the month, falling well short of the forecast for a gain of 733,000 jobs, and that was from a Bloomberg survey. So well under the estimate. We came in at 235,000 jobs added. The estimate was 730,000, well under the estimate, and this reflects a sharp slowdown in hiring from the month prior and the weakest month of job creation since January. And let me show you guys this chart. I'll pop it up here. Give me a second. Let me switch over to my Safari. There we go. Let me just do this as well. You guys can see very clearly this chart, and these numbers are in thousands, by the way. So you can see back in April of 2020, we lost 20 million. Is that 20 million? Yeah, wow, that's crazy. 20 million jobs. That's a lot. And then we started climbing up in May. May 2020, June 2020, July and so forth. And the previous month, in July of 2021, we saw about 1 million jobs added, non-farm payroll jobs. And then we saw the big drop in August to 230,000 like we just discussed. And that is a big drop from July, about 800,000 job drop there month over month. So you guys can see this chart, and it's not the best looking chart. I mean, I wish it was a bit more expanded so we can see it a bit more clearly. But overall, it looks like we've been trending up over the past couple of months, which is a good sign overall for job creation. And the crazy thing is, guys, I'm sure a lot of you know this, these jobs, it's not like they're being created. I mean, these are jobs that were, excuse me, voice crack there. Oops, I'm moving this by accident. These are jobs that were there before the crisis, right? And that they're just coming back. So they're not just brand new jobs being created. I mean, the media makes it seem like that's the case, but it's not. If you look deeper into it, it's not the case. These are jobs that were already here, but they're just coming back. So it's not as impressive as one may think. And I'm sure many of you guys have already made that correlation there. So what do you think? Let me know down below in the comments. I'd love to know your thoughts. As always, your input is very important to me. And like I said, the markets have been selling off a bit today. SPY, which tracks the S&P, it's selling off to that 180 SMA on this 20-day chart. We are bouncing above it, though. As you all can see, two green candles are forming here above that 180 SMA. So maybe we do see a rally from here, potentially back to all-time highs. That's definitely possible, but we're not out of the woods yet in terms of the sell-off. We're still under the main moving average on the 5-day chart, which we could easily get rejected there and go lower. And if we take the lows out from today at about 450, which were also the lows from the end of August, maybe we start pushing down towards, let's go on that 4-hour chart, maybe towards 446, which is another key point here on this chart, which is right around the 180 SMA, which has held pretty religiously over the past couple of months. So that would be a healthy spot for SPY to pull down to. And mind you guys, we saw the bearish divergence last week. So this could be the start of the overall sell-off. And you can see it here on the 20-day chart. RSI is weakening as we're seeing the stock market move up higher. So that is the clear bearish divergence. And again, we could be seeing more selling from here on out. And the markets, I mean, again, they're selling off, but there's a lot of stocks out there that aren't selling off. I mean, take a look at this. We have AMC up 6%. SoFi is up 5%. DraftKings up 4%. GNOG, Golden Nugget Online Gaming, which was bought out by DraftKings in an all-stock deal, that is up 4%. Alibaba is up 3%. Netflix is crushing it, up 3%. And mind you guys, I got a question about this on Patreon, and you could check that out down below. Again, if you all want all my buys, sells, call-outs in real time, all that's on Patreon, plus much more. I got a question about Netflix. This one's really, in my opinion, due for a sell-off, and that's what I was saying in that question over there on Patreon, and now that we're running up even more aggressively, up $20, up 3%, I think it's even more in need of a pullback now, at least on the 4-hour chart, right? And I'd like to see it down to 575 to 590, that general area. And you could also argue on the 3-year chart that Netflix consolidated for a good year and now it's breaking out. So that's a fair argument for the bulls there. But still, it's approaching overbought status on the 3-year chart and on the 4-hour chart. So be careful on this one. If I was personally in Netflix, which I'm not, I'd be locking in profits right now. So yeah, keep that in mind. And we have some other stocks up. Tesla's up today, breaking out. JWN's doing pretty well, which I own, full disclosure. And so same with SoFi. I own both of those right now. And we have CCL doing pretty decent. So even though the markets are red, some stocks are moving up. So it's one of those days, guys. Hope you all enjoyed this video. If you did, hit the like button, drop me a comment, let me know your thoughts, and feel free to subscribe and hit that notification bell so you're not missing out any content here. You want to watch all the videos, guys, because they all have value in them, at least I think, and I'm sure you guys could agree with that, or maybe not. Let me know in the comments. And check out my Patreon if you want all my real-time buys, sells, call-outs, a morning update video, private Discord access, trades I'm making real-time, long-term investments, plus more. All of that's on Patreon, link down below, or you guys can go to stocksurfest.com/Patreon. Make sure to also get your 2 stocks from Webull. They're free, and your $50 from M1 Finance, also free. Those are linked down below. Limited time. Make sure to get your free money. I'll catch you guys in the next video, which I did make a covered call video yesterday. If you guys are interested in selling covered calls, making money while holding on to stocks that you like, check the video out. I'll pop it up here. A ton of value. It's a straight educational video. Check it out. I'll see you guys there. Thanks for watching again. As always, peace out.